everyone, I'm Sally. In today's video, I want to explain how to choose the right amount of insurance coverage and some factors that might affect the premiums. Simply put, I want to teach you how to rationally decide what to buy and how much to buy, based on your actual situation. For those of you who are considering buying life insurance, this video will definitely help you. Okay, let's get started. Basically, for every client who consults me about life insurance, the first question I ask is how much coverage they plan to purchase. However, I find that most clients don't have a specific idea about the coverage amount. Instead, most clients consider it from the perspective of the premium. They often ask me, I have this amount of money, how much insurance can I buy? As I mentioned before, for most families, the primary purpose of buying insurance is to ensure family protection. Therefore, the first factor to consider should be the coverage amount needed by the family. After that, you should choose the right product within your budget, rather than looking at the price first and deciding to buy only if you can afford it or postponing the purchase if you can't. This is like wearing a seatbelt. An accident may not necessarily happen, but we must wear the seatbelt to prevent our family wealth from being unprotected. Please take insurance seriously. Insurance is an indispensable part of family financial planning. So, back to the main topic. How do we calculate the appropriate coverage amount? Although there are many factors to consider, I will introduce two basic formulas that are suitable for most families. The first calculation method considers the needs of family protection. This means the coverage amount equals the family's loans, such as mortgage and car loans, plus end-of-year expenses, which include funeral, taxes, and family expenses during the transition period. Additionally, it includes income supplementation for the family to maintain their current quality of life, and planned inheritance, which covers elder care expenses, and living expenses for children until they become independent. Then subtract the savings from existing assets that can be used for all the aforementioned expenses. This includes the coverage amount of previously purchased insurance. This method can be called the Family Needs Analysis method. It considers the total coverage amount from the perspective of family expenses. In other words, it calculates how much coverage is needed to maintain the current lifestyle of the family when the main breadwinner faces misfortune, thereby determining the basic amount of coverage required. The second method is to consider the human life value, which means the coverage amount equals the current annual income minus expenses, then multiplied by the number of years until retirement. Let me give you an example. For instance, a 40-year-old Dr. A has an annual income of $300,000 and family daily expenses of $150,000, leaving an annual surplus of $150,000. Assuming he retires at 65, there are 25 years left until retirement. According to the human life value calculation, he can now consider setting his insurance coverage at $3.75 million. Another calculation method can be that the coverage amount equals family expenses divided by bank interest. Let's take Mr. A as an example. Assuming the bank's interest rate is 5%, if he wants to cover at least $150,000 in annual family expenses by depositing money in the bank, he would need $3 million in savings. This $3 million is the coverage amount he can consider purchasing now. This method of calculating human life value is generally suitable for individuals with higher assets, using their net worth as a reference for the coverage amount. The main focus is on how to ensure the family's current high quality of life, debt isolation, and financial inheritance, among other things. A policy's coverage amount can be achieved through various options. Once the coverage amount is determined, we can then consider the premium. I have found that most people are generally aware of the premium range they can afford at their current stage. For the same coverage amount, each insurance company will offer different prices due to differences in payment terms, dividend ratios, and other factors. You can compare these prices using each company's illustration. Now, let me explain some factors that affect premiums. First, age is an easy one to understand. Age is the most direct factor influencing premiums. The older you are, the more expensive the premium. I want to remind everyone that the age for buying insurance isn't necessarily calculated based on chronological age. Submitting your application promptly can give you the opportunity to lock in an age that is 1 year younger, thereby reducing the premium somewhat. Second, health status and family medical history are other major factors. Applicants with health issues may face increased premiums or even be denied coverage. Although coverage amounts below $500,000 generally do not require a medical examination, insurance companies may still request proof of health status from a family doctor. Additionally, family medical history can impact the applicant's approval. Therefore, it is advisable to purchase insurance while in good health to ensure insurability. If health issues are discovered later, premiums could become exorbitantly high. In more severe cases, you might not be able to buy insurance at all, even if you have the money. 3. Lifestyle and habits. A person's health status largely depends on their lifestyle and habits. For example, smokers will have higher premiums, and insurance companies will determine how much to increase the price based on the number of cigarettes smoked and other health indicators. Although marijuana has been legalized in Canada, drug use has a significant impact on purchasing insurance and can often lead to denial of coverage. Additionally, the type and frequency of alcohol consumption will also affect the final price of the policy. Additionally, people who enjoy risky activities such as rock climbing, bungee jumping, or flying a private plane will definitely have higher premiums. Compared to the average person, for those engaged in high-risk occupations, premiums will also be relatively higher. In short, any behavior or lifestyle that poses a threat to life and health will ultimately affect premiums and insurability. Of course, if you have already purchased insurance, you can contact the insurance company to lower your premiums by changing unhealthy lifestyle habits and improving your health. Drivers with poor driving records or serious violations will have higher premiums compared to the average person. Other factors, such as the tax law, which was changed once from the end of 2016 to the beginning of 2017, led to increased costs for insurance companies, resulting in higher premiums. Of course, for already purchased policies, the premium will not be affected. Additionally, with advancements in medical care and the extension of average life expectancy, these factors can also impact premiums. Well, I've talked a lot today just to tell everyone that insurance is a very special product. It's not something we can buy just because we have money, nor can we buy it whenever we want. Any event in life can impact the premium and insurability. To be responsible for our family, we should secure insurability as early as possible. When we intend to purchase insurance, we first need to submit an application to the insurance company and wait for the approval process to complete before we can know the final price and coverage amount we can get. Each insurance company offers different life insurance products. Their features and functions are different. So to determine which company and which product can best meet your family's needs, it's essential to consult a professional for a detailed analysis. If you have any questions or want to consult about financial planning and insurance information, you can add me on WeChat for consultation. If you think the video is good, please give it a like and share it, so more friends can see it. Thank you all for your support, and see you next time. Bye-bye.